What's going on, guys? Jay here. In this video today, we're going to look at the TGIF setup from ICT that I want to use as a confluence to the current setup that I have. Before we get going, I just want to make a major announcement. We learned just this morning that the funded trader was removing time limits on royal challenges, which are the ones that allow to have EAs and trade copiers. This is a major announcement and it will relieve a lot of the stress that you have from trying to pass the challenge within a 35-day period. So if you want to grab one, you can use discount code NEXUSPLAS to get an extra discount on your challenge. Here's an example of the TGIF setup. TGIF is for Thank God It's Friday, so it's a setup that we are only looking at on Fridays. What you're going to want to do is look at your charts on 1 hour. You're going to want to pull a fib from the lowest or highest point of the week all the way up until Friday AM. You can see that we had a very bullish week, which was last week, and the TGIF setup says that if you have a unidirectional week, you can expect a 20 to 30% retracement within that last day of Friday. So this only applies to Fridays. The way that my fib tool is set up, if I double click on it, I just added the 0 level, 1 level, 0.3 and 0.2 for 20 and 30% retracement levels. So this is NQ. As you can see, we did achieve a 20% retracement level last Friday the 14th, and this occurred around 3 p.m. So I'm not changing the way that I trade, but I'm adding this Friday confluence to my current setup. If you haven't seen the way that I trade, it has a 90% plus win rate. So I'm going to link the video up top. You can go check that out. This is going to help me on Fridays stay longer in trades. So I'm not changing anything. I'm just adding an extra confluence so that on Fridays, if I were to take a trade similar to this, for example, instead of getting out or taking partials at this level, I may trail the trade a bit further and try to get into that 20% level and get a bit more money out of that trade versus not having that confluence on any other day of the week. As you know, I'm a bit crazy about data, so I started doing the math with SPX and with NDQ, and I'm going to add the Friday confluence in the spreadsheet that I currently use. So you can find that on the website, and I update it daily. This will be updated every Friday for both pairs, NQ and S&P. Yeah, so it really sucks doing this, but somebody's got to do it, and I'm doing it for you guys, so I hope you appreciate it. We have some data points from the previous weeks, and this is going to be, just like the other data, an ongoing process with measuring the Friday TGIF confluence for NQ and S&P. We're going to be tracking the day is always Friday. This is just a hint to show you that this setup only occurs on Friday. And then we have the date, which pair we're looking at, valid yes or no. The validity of a trade is sometimes we have a situation, for example, like this one here. We have the high of the week on Sunday, and we have the low of the week on a Thursday, and then on Friday we're not making the low of the week on that specific day. So the setup is not valid in a situation like this because it already retraced within the 20 to 30% range. So the validity value is that. So some of them we have to eliminate because the TGIF setup doesn't happen on both pairs every single Friday. And then we have similar data. What did we raid? Was it a win or a loss? And then where did I pull the fib to? What hour was that on a 15-minute time frame? What was the trade direction? And did we hit 20 or 30% retracement? And then I'm going to start including the trading view image, and I'm going to add some notes here. For example, the trade that you're going to see here in a few seconds, it did not reach 20% on Friday, but it did on Sunday at the open. So I'm going to add some notes here. So this is just an extra data set for you guys to look at the data from the TGIF setups and trust them so that you feel more comfortable staying in trades longer on Fridays. I created a very simple protocol for this. Price needs to reach a higher time frame PD array in the form of an FEG or liquidity. So one of those two things need to be targeted and achieved before we can move on to the next step. A Judas swing between open and PM session in the form of a raid. So that would most likely be the London high or low plus another session raid, because it's going to be a big move in the morning with the Judas swing. And then we're looking for a break of structure or market structure shift, as some like to call it, with an FEG targeting the opposing liquidity. So we need to look at the exact same setup that we're used to trading. It's just a different day and we have a different target. The difference is at that opposing liquidity, once that's reached, instead of taking everything off, take a partial or go to break even, and then you leave a runner all the way to the 20% retracement area of the TGIF setup. And I think that's where we see the beauty of this confluence, is that we're not really changing anything about what we're doing, but instead of taking everything off, we can leave a runner or a partial position go all the way to that 20% zone if all the other conditions are valid. And that's going to help you get more money for the same trade. Here is the live execution of that setup on S&P from last Friday. It did not reach the 20% retracement target in the Friday session, but it did reach it on Sunday, and NQ did actually retrace all the way to 20%. So sometimes these setups are valid on one pair and not on the other. So that's why I'm going to be tracking both for this exercise to get the highest quality data possible. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel for more content like this in the future. Thanks and have a great day.